You're listening to chartingwealth.com for Monday, the 22nd of June, 2015. This is where we are in the total market, IYY. You can see, if you're watching us, if you're listening, I'll tell you what we're seeing. As we look at the market, we can see on the two-day chart, there has been a substantial push up in the total market over the last 2 days. We can see where the market ended on Friday. There is a large green up candle all the way up to and pushing on the 30 and the 34 moving linear regression lines. Now on a 2-day chart, that would be the 60-day moving linear regression line and the 64-day. And what we see happening is we see a large green candle with a long wick, actually. If you can, those who are looking on the video, you can see the wick of the green candle actually pushes way above the Bollinger Band. So it was pushed down about the same length that it went up, about half. If we looked at the entire candle and the candle wick, we can see that it actually went up twice as high as it ended. The bears were able to push it down that much. So there is still a considerable amount of downward pressure on the market, as much as the exuberance shown when the Fed apparently said that they were not going to be increasing the interest rates this go round. And even when they do, it might be 0.25%. So since we live in a world where making things doesn't seem to matter anymore, but free money does, even though there are problems with the economy, the market shot up on that news. And hey, all we do is do what the charts tell us. We don't listen to the talking heads. We listen to what the charts tell us because we're trying to make money in the market, not correct flaws. And what we see is a merging still. There is a merging of the MACD and the signal line on the 2-day chart. It has not crossed yet, so we are still technically in a downtrend. And in fact, if you look where the downtrend started, back on the 22nd, we are not up to that. That was about when the downtrend started. The market ended on the 2-day charts actually going up on Wednesday, the 20th of May, and the close that day was 107.70. The market, total market, when it closed on Friday, was at 107.07. So, about 63 cents off that high. So we're still below that. What is going to happen? Well, it may cross over and go up. But again, when you look at how big the wick was on this 2-day chart, you realize how much downward pressure there was. This is not like a market that's just flying out of control up. It's a lot of pressure pushing it down. That's why these candlesticks are so valuable for us to look at. Now let's drop back to the 4-hour chart and see what we see. And you can see where over the last day on Friday, the market actually opened much lower than it closed on Thursday and then tracked down the rest of the day. And in fact, the MACD on the 4-hour chart is coming together, looking like it's losing steam at this point. So again, we are technically in a downtrend due to the MACD crossing over, going down on the 2-day chart. And the 4-hour chart doesn't look like it has a lot of steam. So we shall wait and see how the market continues to track. Now let's go back. That was the total market. Let's look at the SPY on the 2-day chart. Very similar, but the wick on the 2-day chart actually is considerably taller on the Standard & Poor's 500. That's what the SPY represents. It's almost twice as high as the high where the market actually closed on the 2-day chart for Friday on the 19th. So that is very interesting how much downward pressure or artificial exuberance was at first exerted on the market and how much it got pushed down. So let's back up from there and take a look at the 4-hour chart and see what we see. And you can see very similar. In fact, it looks like it's coming together even quicker going down on the 4-hour chart, where it ended the day on the 18th at the end of the day. And again, the 4-hour chart's the half-day chart. So every day is both a 12 o'clock and a 4 o'clock candle. That's what we're looking at. And we can see the market tracking down, actually opening lower than it closed on Thursday and closing much lower than it closed on Thursday. Both of the candles are down candles on the 4-hour chart. So we can see that it does appear that exuberance in the marketplace has also been petering off. So on the SPY, we're also technically in a down move still. The move that happened is not as high as the past high. And so that's where we are on the S&P. Let's back off now to the 2-day chart and let's go to the Qs. And just for the record, IYY was down. The total market was down just a little over 0.5%, 0.56% on Friday. The S&P 500 was down almost a full percent. It was down 0.93%. And the Qs that we're looking at now, which is the NASDAQ 100, was down 0.72%. We can see similarly that big bump up in the candle there on the last 2 days of the week, Thursday and Friday. And what do we see there? Again, we see a wick that is about the size of the candle itself, a little bit smaller. So the bears didn't have as much push down as we saw in the IYY and particularly the S&P 500. But we do see a wick bumping up there and getting pushed down, going above the Bollinger Bands. We also have not pushed nearly as much up on the moving average, the moving linear regression lines, the 30 and the 34 on the Qs. But what we do see is it does look like the MACD lines are coming together, a converging of the signal in the MACD, and a falling off as far as the down movement went in the derivative oscillator, which are the light red boxes that we see for those who are looking at the video instead of just listening to the audio. Now let's back up and take a look at what's going on the 4-hour chart. Same kind of thing. We see the 4-hour chart opening lower on Friday and going lower throughout the course of the day, although the MACD does not look like it's converging nearly as much as the SPY and the IYY were. We do see a dropping off of the derivative oscillator a little bit. And again, what does that tell us? Well, it may tell us as we get into the week that the market itself was exuberant for a day or so and now is going back to its standard sideways movement or maybe even down. We are technically also down on the Qs at this point. If we look at the 2-day chart, even though it did break through the 2-day trend line, you would just, again, cautiously watch what the charts are doing as we get into this week, if the down move is going to continue or if there's going to be up movement to push it on through the 2-day chart. We don't see that yet. We don't see a crossing over yet on any of the charts like we saw a crossing over going down back between the 3rd and the 5th, or a crossover going up between the 14th and the 18th. So that's what we would be looking for. We don't see that yet. We just saw a bump up over 2 days. So continue to pay attention to what goes on as far as the indexes go. They are all officially still down, even though the Fed news changed things up somewhat. Now, let's go to gold on the 2-day chart. What do we see? Well, gold, as we talked about back on the 17th, we saw that gold had a lot of indecision. We saw a cross, or what we call a doji, a Japanese word, means, well, we're talking indecision here. The bulls pushed the market up as much as the bears pulled it down, and it closed right where it opened. And there were candlesticks, or rather wicks, on either side, meaning there was a lot of push and pull, meaning a lot of indecision. Market didn't know where to go. The next day, however, when the Fed released its decision on that 2-hour candle between the 17th and the 19th, a lot of movement up on gold. Gold actually, over that 2-day candle, it opened at, let's see, it opened at 113.39, and its high was 115.61. Its low was 113.39. That's where it opened, and it closed at 115.22. So we've got a large candle moving up. It was enough of a movement over those 2 days to actually cross over the trend line. To cross over on the MACD on the 2-day candle. And what we see there is a pretty substantial move up in gold. Now, if we back off to the 4-hour chart and get a little bit better of a feel, what do we see? Well, we saw all that movement occurring actually the morning of the 18th. We saw an incredible amount of movement morning of the 18th. I mean, literally up several dollars. The low was 113.23. That was the opening, and we saw all that move up to a high of 115.61 and a close at 115.18. And then we've seen gold bump its head for the next 2 days. It has not gone any higher than that high, and it has just moved right along that area. It's not done anything. So what do we do when we see a commodity like gold bump up and then bump up substantially in just a 4-hour period and then not be able to get higher over the next 3 periods? Well, that's something that you carefully want to watch and see if indeed there's any more momentum there, or if that momentum's completely burned out and then gold rolls back over. Now, if you notice, we were already in an uptrend on the 4-hour chart on gold. It crossed over going up between the 9th and the 10th, and it continued to move up throughout that time period. Well, it actually slid sideways, but as far as the MACD goes, you can see that it moved up during all those times and then was sort of petering out until that Fed news hit. And at that point, gold shot up, but has shot no higher. So if you ask me what I've seen in the past from a pattern like this, it doesn't have any additional steam to go any higher. It's holding that. Chances are it may very well roll off that, but you'll just have to pay attention and see where it goes. Could it go higher? Sure it could. The Bollinger Band's pushed out with all the volatility, and it could of course go higher. But the fact that it hasn't over the last 2 days should tell you something. So that's where we are. That's where the markets ended the week. As we get into the new week, lots of interesting things to watch. Let's see if indeed gold and the 3 indices roll over and start moving down. They may very well do that. They may not have enough steam to keep moving up, but you know what? We pay attention to the charts and do what they tell us. And at this point, they're not telling us a lot, except they got excited over a day or so, and now they're digesting that, and we need to figure out which way they're going to go as we get into the week. Thanks so much for listening. Hope this has been helpful. We appreciate you joining us always for chartingwealth.com. Please join us on Twitter, Facebook, and at chartingwealth.com. We love your comments, questions, concerns. We're here to help. God bless. Wish you the best in trading. chartingwealth.com.